Hello everyone, welcome to the only stock market channel on YouTube that's worth watching. I'm your host, Hamid Trades. In today's video, we're going to be talking about the SPY, the NASDAQ, the IWM, the bonds, the dollar, maybe even the 30-year yields in Bitcoin, all right? So without further ado, let's get started with the video. Number one, I just want to start off with explaining to everybody that I share all of my trades live completely for free. This is today's success rate. We went 4 for 5, 30% play, a 20% plays, a 10% play, and then a 10% loss. I share all of my trades live completely for free. I live stream on YouTube, Twitch, and TikTok. If you're interested in learning how to trade, if you're interested in joining this community of like-minded, hardworking individuals, positive environment where everyone is trying to help each other, feel free to join the Discord. If not, feel free to tune into the live streams on YouTube, Twitch, and TikTok. Do all that good stuff. Subscribe to the channel. I live stream every single morning from 9:30 a.m. to 11:30 a.m. All right. And actually, tomorrow I'm going to be starting to charge $100 a month. No, I do all this live completely for free. I've never charged anyone $1, and it's going to stay that way. All right. So I hope you guys enjoyed. Let's get started with the analysis. So number one, we have unemployment claims numbers coming out at 8:30 a.m. So more than likely that should cause some sort of a movement in the market, pre-market. So based off of unemployment claims, it would be nice to see if the market ends up responding positively to that news. And in response, basically as we got closer to this level of support here, the lower level of the range at 375, if unemployment claims causes the last 2 trading days of the year to have a bit of a bullish structure. So that would be pretty interesting. But immediately, right? Today's video is going to be a continuation of yesterday's in terms of like the weakness and everything that I was showing with the bonds. Okay. So first off, let's just take a look at the SPY. So number one with the SPY, we know that the IWM and the SPY were basically, we know that the IWM was holding the SPY up essentially, right? And the NASDAQ is obviously the biggest loser. What is concerning here is that the lower level of the Bollinger Band on the SPY continues to fall lower and sharply fall. So once again, for us to become very overextended to the downside, we would need to be trading outside of the Bollinger Band substantially, similar to what happened in the beginning, a few days ago, a few weeks ago in the middle of December when we were trading like this. So, that is not a very good sign for bulls because that just shows that there's a lot more potential room to the downside on the SPY. And ideally, right, what we would want to do is we could easily get a nice longing opportunity close to this level of support at 375, which is the lower level of the range. If that doesn't hold, then there's a lot more room to fall to the downside and many different pockets of support as we fall lower. But then it's just a matter of, I'm going to show later, it would be a matter of catching the bottom of the weakness. So for now, you know, there's not really much else to look at in terms of the SPY. Let's quickly just go ahead and take a look at the IWM. So the IWM a bit similar to the SPY in terms of the relative distance away from the Bollinger Bands and, you know, the relative weakness, etc., etc. It's not as weak as the NASDAQ. All right. So you can see that the IWM, this lower range for the IWM was 170-ish. And you can see today we're basically trading around this lower level of the range. So if the IWM continues showing weakness, maybe because we're very close to a level of support, it can hold. But 170 level is going to be very, very important on the IWM, very clearly, right? So there's that for the IWM. Now I want to take a look at the NASDAQ. So yesterday, I was showing how the NASDAQ obviously was the biggest loser. It was showing continued weakness, right? And relative to where the SPY and the IWM is, we're very close to the lower level of the Bollinger Band on the NASDAQ here. But the Bollinger Band is continuing to vomit to the downside. So regardless of how many red candles we have, yesterday we had a 1.4% red day. Today we had a 1.3% red day. Tomorrow, the day after, we can just continue having red days. But that doesn't mean anything. And it won't mean anything in terms of being overextended to the downside because the Bollinger Band continues to collapse. So the only way, so for example, today, instead of having a 1.3% move, the lower level of the Bollinger Band was close to 258. So for us to have an overextended move to the downside on the Bollinger Bands, the NASDAQ would basically need to have a much bigger red day and basically close below 258. So that would be a monstrous move to the downside, and that would be about like a $4 or $5 move to the downside for us to even get 1 day of overextensions to the downside. Basically, this weakness can sustain itself much longer, okay? And the only thing that is in the favor of bulls is the bonds. So let me go ahead and explain that real quick. All right, so here's a chart of the 30-year bonds. And we know that the bonds generally have a correlation to the stock market. So if the bonds are doing well, then the stock market should also be doing well, okay? So now when we take a look at the bonds, and so when we take a look at the bonds, we could easily see that the bonds are very overextended to the downside, similar to what we would want to see on the NASDAQ. So the bonds, they're overextended to the downside because we're trading outside of the lower level of the bands. Historically, we've seen the bonds trade 5 days outside of the bands consecutively. We just continued closing outside of the bands for 5 days in a row. That's happened before. But that generally only happens when there's like extreme weakness in the stock market. Usually, it is very rare to see the bonds have more than 3 or 4 days outside of the bands and close before we get a green day. So tomorrow would be the 3rd day. We need to see how everything basically opens and closes for tomorrow. And then tomorrow, based off of tomorrow, we would be the 3rd day potentially overextended to the downside. And then we might have a bounce either towards the end of tomorrow or Friday. But regardless, we're not counting on it. We just have to continue to monitor how the bonds are affecting the stock market. This isn't an automatic reason to become bullish just because we are overextended on the bonds, because there can still be more room to the downside. But if they did want to bounce it into the end of the year, the bonds showing this weakness is a good indication that there could be some buying pressure. So yeah, essentially there's that for the bonds. We could quickly take a look at the dollar. It's not really that important at the moment. Usually the dollar would have an inverse correlation with the stock market. So if the dollar is doing well, then the stock market does poorly. So today we had a bit of that. We could also see that the dollar is breaking some sort of, like a downtrend. But basically now we just need to see if the dollar starts breaking out. And if the dollar continues and starts to break out here, how bullish will that be for the dollar and how bearish will that be for the stock market? Over the past few days, few weeks, we've seen that the correlation between the dollar and the stock market has subsided a bit. So it's going to be very interesting to see how the strength of this dollar is going to affect the overall stock market, especially what's going on with different central banks around the world, Bank of Japan, and everything that's going on in Europe as well. So it's going to be pretty interesting to see how the dollar affects the overall stock market, or if we truly are in a risk-off environment where assets don't want to be essentially people don't want to be caught holding any assets, or they want to lower their risk towards assets. So let's see if this is truly going to be a risk-off environment. The next few days, few weeks should be very important. Just keep an eye on the strength in the dollar, and that strength in the dollar could cause more weakness in the stock market. So that'd be very interesting. The other thing is the VIX. So we were showing the VIX yesterday about how this MACD level on the VIX, we were about to cross over. And generally when we're about to cross over, right, this blue line crossing over the yellow line, when we do have a crossover, right, that is generally bullish, and the momentum lasts 1 or 2 more days afterward. It obviously doesn't work as clean on the VIX because the VIX tracks volatility, and it's just a different calculation. But essentially, if the VIX is going up, then the stock market generally is going down. So this momentum if we get a crossover and continue up here, I'll be bullish for the VIX, and it should be bearish for the stock market. But aside from that, there are mixed signals, but mostly a lot of them are they're still pointing bearish. So essentially, for us to start becoming bullish, we need to see some buying pressure out of the stock market, and I think that's going to start with unemployment claims tomorrow. So depending on how unemployment claims are, and then depending on how we close tomorrow, towards the end of the day tomorrow, Friday could potentially be a random green day, and we're going to position ourselves well Thursday into the close. If I start seeing some buying pressure, and if I start seeing buyers stepping in, if we feel that like a lot of the moves to the downside were not being, if they weren't churning like butter, if the support was being held like a rock and the price did not want to fall below levels of support tomorrow into the close, we'll feel how bullish the day is, and then depending on that, we could take swings to play into the end of the day for Friday, the end of the year, actually. So it should be pretty fun. I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff, and I will see you guys bright and early tomorrow morning. Thank you.